Welcome to the Make It Make Sense podcast, where we do deep dives into everything interesting.
All right, so the Fed just threw us a curveball with this interest rate cut. Let's break it down, figure out what's really going on.
Yeah, a half-point cut is not something you see every day, especially when they're saying it's because inflation is cooling down.
Right. I mean, usually rate cuts are for when the economy is like sputtering.
Yeah.
But inflation's been the big worry. So what gives? They keep mentioning this balance of risks thing.
Yes, the balance of risks. Basically, the Fed is walking a tightrope right now.
Okay, I like that image, a tightrope. So on one side, you've got, what, keeping inflation in check?
Exactly. They've been pretty clear that they want to see inflation come down even further, closer to that 2% target.
Right, 2%. We've heard that before. But on the other side of the tightrope,
On the other side, you have the potential fallout from all those previous rate hikes they did. You know, raising rates too much or too quickly, that can really slam the brakes on the economy, and nobody wants to see a recession.
definitely not. So they cut rates, trying to keep things balanced, but there wasn't a whole lot of agreement, was there? We saw that one dissenting vote.
Yeah, that was interesting to see. One member actually wanted a smaller cut. That hasn't happened in, gosh, almost 20 years.
Wow, 20 years.
Mhm.
So what does that tell us? Is the Fed divided?
It suggests there's some genuine disagreement within the Fed about how cautious they need to be. This dissenter, they probably think a smaller cut would be enough to support the economy, maybe give them a little more breathing room to see how inflation plays out.
Interesting. So progress on inflation, that's the good news. But still, a lot of uncertainty, hence the tightrope walk. And speaking of uncertainty, I gotta say, listening to Powell's press conference, I kept hearing two words over and over: patience and recalibration. Almost like he was trying to send a message.
Oh, absolutely. He's definitely trying to manage expectations. Those two words, patience and recalibration, they tell me the Fed is in wait-and-see mode. This rate cut doesn't necessarily mean a whole bunch more cuts are coming.
Okay, so no reading into this as like the start of a new trend. They're playing it by ear.
Exactly. It's all about the data now. They're going to be watching the economic indicators like hawks. And speaking of data, we should probably delve into those economic projections. They give us some pretty important clues about where the Fed thinks things might be headed.
All right, economic projections. Sounds kind of dry, I know. But this is where we get into the nitty-gritty, right? What are they actually expecting to happen with the economy?
Yeah, so they put out these projections, and they're basically saying they expect GDP growth to remain steady. Basically, the economy keeps chugging along, no recession, but there's always a but, right? They're also saying unemployment might tick up a bit.
Okay, so help me understand that. Steady growth, but more people out of work. How does that add up?
Think of it like this. The Fed, they're trying to find this balance. Remember that tightrope?
Right, the tightrope.
So they need to keep inflation in check. That's priority number one. But they also don't want to completely crush the economy while they're at it. So they're willing to accept a little bit of a rise in unemployment, maybe, if it means getting inflation back down to that 2% target. It's all about trade-offs, you see.
So it's like a necessary evil,
Yeah.
to them at least.
Well, necessary might be a strong word.
That's
Let's
fine.
just say it's part of their calculated risk.
Calculated risk. Okay, so GDP, unemployment, those are the biggies.
Right.
What else should we be paying attention to?
Well, remember how we were talking about the Fed being in wait-and-see mode? How this rate cut doesn't necessarily mean a whole bunch more coming.
Yeah, playing it by ear.
Right. So what they're going to be looking at very, very closely is how the economy responds to this rate cut. Are we seeing inflation continue to moderate? Is the job market holding up? Or are things starting to look a little shaky? They need more data, more information, and until they have a clearer picture, they're not going to make any rash decisions. That's what Powell meant by patience.
Okay, so patience for them, but for us, we got to be paying attention. What should we be looking out for specifically in these economic projections?
Well, the thing about these projections is that they're not guarantees.
Right, it's not like they have a crystal ball or anything.
Exactly. They're just their best guess based on the information they have available right now. But the economy is complex. There are so many variables, so many things that can change. So the most important thing to remember about these projections is that they come with a range. They're not saying GDP growth will be exactly 2%. They're saying it could be anywhere between, say, 1.5% and 2.5%.
Yeah.
Same with unemployment. They're giving us a range of possibilities, not a precise prediction.
A range of possibilities. Okay, that makes
Right.
sense. So we're not just looking at one number, we're looking at this whole spectrum of potential outcomes, which I guess is kind of the point, right? Nobody knows for sure what's going to happen.
Exactly. And that's why the Fed is being so cautious. They're not going to overreact to any one data point or any 1 month's report. They're going to be looking at the bigger picture, the overall trend. And until that trend becomes clearer, they're going to remain patient and keep all their options open.
Got it. So patience, careful observation, and a willingness to adjust course if needed. Sounds like a good strategy for all of us, not just the Fed.
Absolutely. Being informed and staying adaptable is always a good idea when it comes to navigating the economic landscape.
Couldn't agree more. But you know what else Powell mentioned a few times that I found interesting? The global economy. Like, what's happening outside the U.S.? What's that all about? Okay, so global economy. Why is Powell bringing that up? What's going on in the rest of the world that could rock the boat here?
Well, remember how we were saying the U.S. economy doesn't exist in a vacuum?
Right. Interconnected and all that.
Exactly. So even if things are looking relatively okay here, if there's trouble brewing elsewhere, that can spill over. Like, imagine if there's a sudden slowdown in China, which is, a major player in the global economy.
Huge.
Huge, yeah. They buy a lot of our stuff. So if their economy weakens, they buy less, and suddenly our exports take a hit.
Makes sense. So that could throw a wrench in the Fed's plans, even if they're doing everything right here at home.
Exactly. Or let's say there's some kind of, political instability in Europe.
Yeah.
That could lead to uncertainty in the financial markets, which can definitely have ripple effects globally, including here in the U.S.
Okay, so basically, it's like the Fed has to play chess on multiple boards at the same time. They've got their eye on the U.S. economy, but they've also got to be aware of what's happening with our trading partners, what's happening politically around the world, because all of that can impact what they do here.
You got it. It's all interconnected. And that's why, even though we've been focusing on the Fed's latest move, these interest rate cuts and what they might mean for the U.S., it's important to remember that the story doesn't end there. There are all these other factors at play, things that are harder to predict, but that can definitely have a real impact.
Okay, so much to keep in mind, so much to watch out for. But hey, that's why we do these deep dives, right? To try to connect those dots, help people make sense of it all.
Absolutely. And, even though it can seem complex and a little overwhelming sometimes, I think the important thing is to stay informed, keep learning, and not be afraid to ask questions.
Couldn't agree more. Knowledge is power, as they say. And hopefully, with a little more knowledge about the Fed, about the economy, people will feel a little more empowered to navigate whatever comes next.
Here's to that.
Cheers to that. All right, that's it for this deep dive into the Fed's latest rate cut and all its potential implications. Thanks for joining us as always. And until next time, stay curious.
Thanks for listening to another episode of the Make It Make Sense podcast. As always, if you learned anything from this episode, please take a moment to like this video, or if you found it intriguing and want to hear more, consider subscribing.